People think silver is boring, an old metal, something from history. But while everyone watches stocks, crypto, and headlines, something massive is happening quietly. BlackRock, the largest asset manager on Earth, is positioning for a date most people have never heard of: March 2026. This isn't a prediction, this isn't hype, it's a deadline, and it's tied to a silver shortage that's been building for years.
BlackRock doesn't chase trends. They move early. They move silently. In early 2026, major institutional capital began flowing into silver-backed funds and mining positions. At the same time, trading volume in the largest silver ETF exploded to levels that almost matched major stock market funds. That doesn't happen because of retail investors. It happens when institutions are front-running a supply problem. BlackRock isn't betting on price, they're securing access.
For 5 straight years, the world has used more silver than it mined. Not once, not occasionally, every year. In 2025 alone, the global market ran a deficit of over 100 million ounces. Silver isn't just jewelry anymore. It's essential for solar panels, electric vehicles, semiconductors, data centers, military electronics. Modern civilization burns silver, and burned silver doesn't come back.
Here's where it gets dangerous. Vault inventories in major trading hubs like London are thinning. At the same time, China, the world's largest silver consumer, has tightened export controls. Less silver moving out, more silver being consumed. By early 2026, solar manufacturing alone is projected to absorb over a quarter of global supply. March 2026 is when these pressures collide. Demand peaks, inventories strain, and the physical market starts breaking. That's the bottleneck. Something else changed recently. Russia, India, Saudi Arabia all began adding physical silver to national reserves, not as a trade, not as speculation, as a strategic asset. At the same time, regulators discussed allowing silver to be used as collateral inside banking systems. That's not a rumor. That's silver quietly re-entering the monetary system. On paper, there are hundreds of silver claims for every real ounce. When markets stay calm, nobody notices. But when shortages appear, paper promises collapse. Physical metal doesn't. That's why institutions are positioning now, before the scramble starts. This isn't about getting rich overnight. It's about understanding the shift before headlines catch up. Silver is no longer just a commodity. It's becoming infrastructure. It's becoming collateral. It's becoming strategic. March 2026 isn't magic. It's the moment reality becomes visible. Most people will hear about silver after the move. Institutions move before it. Now you